Welcome to ISE's Equity Index Weekly Outlook, a weekly outlook on ISE and other industry indexes, hosted by Patrick Seresna, a derivative market specialist and investment manager with extensive expertise in options and the broader derivative markets. ISE trades options on more than 15 proprietary sector indexes, as well as broad-based indexes and a variety of licensed benchmarks. ISE continually enhances its trading systems and develops new index options products to provide investors with the best marketplace and investment tools to trade smarter.
Hello and welcome to the ISE Equity Index Outlook for October 31st, 2011. This is Patrick Seresna. As always, we start off with a chart of the S&P 500 using that SPDR exchange rate fund symbol SPY. We had last week a very bullish breakout on the upside. If one recognizes all the major low supports that occurred around the 126, 127 level through the months of February to July, that should have been a significantly formidable overhead resistance. Particularly, that was a level being confirmed as well through Fibonacci retracements and other different types of technical measuring techniques. The fact that the bulls have accomplished this at the same time as the Dow and the Nasdaq pushing to important technical high levels, the immediate bear market that we've seen in go over the summer of going into that August-September period is really at this stage appears to be a rear view mirror. Now, it doesn't mean that the market is going to be advancing in a straight line fashion all the way to the highs of the year, but at this stage, if the bear market lows are in, then every sell-off opportunity, whether even if it is 2-3 days in duration, will probably emerge as a buying opportunity for the market. So really, we'll be watching for those pullbacks. This stage, if the S&P was to in any way pull back to 126, 124, 122 on the downside, more than likely it will find support and will probably emerge as a buying opportunity. Next year, when we take a look at the ISE US Regional Banks Index, which is symbol JLO, we've seen a technical bottom now and a break of the 19.5 to 20 overhead resistance. At this stage, the regional banks have shown reversal patterns, and while it certainly doesn't mean that they're going to go straight line higher up towards the 22.50, more than likely any short-term pullbacks will more than likely emerge as buying opportunities as the regional banks will probably strengthen and retrace much of the 9-10 months of selling that we've seen in this sector. Next year, I want to take a look at the ISE Syndex, which is symbol SIN. This is an index of all the casino, tobacco, and distiller companies. As well, this index has had a nice bullish push above the 128, 130 level. And while in one day doesn't make a new uptrend, one has to recognize the context of the Syndex and with what's happening in all the broader indices. And really, at this stage, there's room for the Syndex to continue to strengthen, and pullbacks will probably emerge as buying opportunities. All of these markets that we've been looking at have the potential to at some stage return to some key overhead resistance levels. In the case of things like the S&P 500 and the Syndex, it would be their highs, while the JLO will probably have to still come up with some higher overhead resistance levels before it can make a really big bullish push into the future. Next year, I want to take a look at the ISE Home Builders Index, which is symbol RUF, and the Home Builders Index as well has shown some positive reversals. Whenever you see a rally that basically undoes the entire last wave of selling, it is always a bullish indication. So long as the home builders do not turn around and make lower lows, then any pullbacks should also emerge as buying opportunities for returning back to the $8 to $9 area on the upside. Next year, I want to take a look at the ISE Natural Gas Index, which is symbol FUM, and similarly to what we saw in the previous charts, as we've now seen an entire reversal of the last wave of selling. Really, at this stage, with this kind of strength and reversal on the natural gas index, more than likely the key bottom is in, and we're going to be looking for pullbacks from which new buying opportunities will emerge. Here, when we take a look at that ISE Mini FTSE 100 index, which is symbol UKX, we had a nice bullish breakout on the upside. Obviously, that gap occurred during the European trading session. So when it started trading in North America, you saw those big gaps on Thursday and Friday higher. Really, at this stage, the FTSE has lots of room to the upside, just like we do in all the other markets. At some stage, beyond a few day pullbacks, we should see the FTSE strengthened all the way back to its previous highs around that 600 to 610 area on the upside. That was your ISE Equity Index Outlook. Thank you for joining me.
Thank you for participating in this week's session. Please join us again next week. For more information about Patrick Ceresna and to sign up for free index options trade alerts, visit www.optionsource.net. To learn more about ISE index options, visit us at www.ise.com/indexoptions.